welcome to Finextra TV's Predict 2022 series. I'm Hannah Wallace, and kindly joining me now is Kanika Hope, Chief Strategy Officer at Temenos. Kanika, it's lovely to see you again. Thank you for joining us.
Hi Hannah, good to see you again.
Good to see you, and really looking forward to talking more about open banking. I know we've covered it a lot in the past, and there's no doubt it's made a huge impact on the banking landscape, and with this has come the rise of some interesting new business models. So let's start there. How have you seen banks adapt to these new models?
You're absolutely right. Open banking is the first real step towards disrupting the banking business model and the balance sheet. Banks no longer own the privileged position in either payments or customer awareness. Open banking is forcing banks to coexist, collaborate, and co-evolve with so many different players in a very busy ecosystem. And it's forcing banks to move from the traditional model to new business models, such as banking as a platform and banking as a service. Now, banking as a platform is a model whereby banks provide their own products as well as aggregate third-party products on their own platform to customers with whom they have direct relationships. And they make money through network effects on that platform as more and more players join. Banking as a service, in contrast, is when banks provide their banking services to a third-party digital ecosystem or platform. And they make money through new revenue streams, through the new channel. Now, in reality, banks must follow multiple business models depending on their strategy, depending on their position in the market, and they are indeed doing so. So in markets where they dominate, they might choose banking as a platform. And to enter new markets, they might choose banking as a service. And Standard Chartered is a great example of a bank that is following all these different models. So in Africa, for instance, they are setting up digital challenger banks catering to the unbanked population. In Hong Kong, they are teaming up with a telco and a travel company to create a bank called MOX, a digital challenger bank. And in Indonesia, they're providing banking as a service.
And yes, let's talk more about banking as a service then. Perhaps you could elaborate on that, because it's a really exciting space.
Sure. So as you know, banking as a service has really come into its own since the COVID-19 pandemic and the rise of embedded finance. So what is banking as a service? It's the provision of complete banking processes, loans, deposits, payments, offered as a service from specialist cloud-based, API-based platforms that in turn source the banking regulated infrastructure and processes from a licensed entity like an incumbent bank. KPMG predicts that more than 100 or 150 institutions worldwide are engaging in embedded finance initiatives today, leading to at least 20 to 30 major BaaS propositions across the globe. This is set to grow as embedded finance becomes more and more part of our everyday lives. And you have lots of examples, like you have the ride-hailing cabs, the Ubers, the Lyfts, the Grab in Singapore, who are offering a lot of financial products to their gig workers, like credit cards and instant payments, etc. And then you have a lot of very interesting BaaS providers in the market, the likes of Solaris Bank, mBank, Woodenio, Rails Bank. And then you have the challenger banks like Green Dot and Starling, who are branching out into BaaS. And finally, the incumbent banks, many of them are offering BaaS directly to the brands or partnering with BaaS players.
So it's a really fast-moving space, really exciting. So perhaps you could shed some light on some of the disruptive use cases you're seeing around open banking.
Certainly. I think open banking use cases have moved a long way, have come a long way from the days of personal finance management and aggregation as open banking evolves and as disruptive technologies like artificial intelligence and machine learning are applied to open banking data. So I'll call out two use cases today. One is buy now, pay later, BNPL, and the other is around sustainability. So when we look at buy now, pay later, this is a product that is completely disrupting consumer lending. And it's been growing at astronomical rates in the last few years, and it's predicted to grow at 60 to 70% in the coming years. Now, what it has done is it upended the economics of consumer lending from lending spreads from consumers to commissions from merchants. Now, why do consumers like it? Younger and financially strapped consumers particularly like it because it's zero interest and it's convenient. Merchants love it because it allows them to acquire new customers very quickly and cheaply. It increases their order value and it increases loyalty. Now, PayPal is an example of a player in the market They have launched BNPL in 2020, and they rose to 22 million accounts in just 9 months, which was the fastest and most successful launch in their history. Yeah? So BNPL is predicted to become regulated in the very near future, and this is where open banking comes in. Most BNPL providers have their own proprietary credit scoring algorithms. Now, as BNPL becomes more widespread and consumers buy from multiple providers, there will be a real need to share customer profile and behavioral data across entities through open banking. Now let's come to sustainability. Open banking has been used in sustainable initiatives for some time, and the most simple use cases where a financial services app allows a consumer to look at their carbon footprint, right, through additional data. There are more interesting cases coming up in the UK around sustainable investing. So Starling and Standard Chartered, our old friend, are collaborating in creating a sustainable finance platform called Shoal in the UK. And here, Standard Chartered is providing that service as banking as a service. The most innovative use case that I know is Ant Financial in the developing world, teaming up with the UN to provide finance to sustainable farmers. And the credit decision here is made not just on traditional credit data like payments, etc., but on data from remote sensors on soil quality, on satellite imaging tracking deforestation, and on the recordings of the sounds of humans and animals. So this is truly innovative, and here we are moving from open banking to open finance to OpenX to open data, isn't it?
Fascinating. Thank you so much for sharing those use cases with us, Kanika. And taking all of that into account then, what technology capabilities do banks require then to be successful in their open banking strategies?
Well, that's a really good question, Hannah, because open banking has been slow to take off, partly because of the constraints of the legacy architectures of incumbent banks. So in the UK, for instance, a few months after open banking went live, a number of banks were unable to meet their service level commitments to consumers in terms of latency and availability. So what open banking requires banks to do in order to offer any of the models that we talked about is modern cloud-based architectures using microservices, APIs, containers. They need to be able to provide modularity. They need to be able to provide hyper-personalization, at the same time, the highest levels of resilience and security, so that they're able to provide differentiating propositions to their own customers, as well as to build those ecosystems and platforms. And software as a service provided by modern software package providers running on public cloud infrastructure further complement and support all the open banking models, banking as a platform as well as banking as a service.
Kanika, thank you so much for sharing your insights and some really good advice weaved in there as well. And look forward to catching up further down the line and reflecting on these predictions. But until then, thank you very much.
Thank you, Hannah.